What's going on, YouTube? Have you ever wondered about investing in stocks but just don't know where to start or what to do? Well, stay tuned because this video is going to be Stock Trading 101. We're going to talk about what they are, the different methods that are used to acquire them, and also how you can get started for as little as £1 a month. I'm Roger Arnold and this is Everything Wealth. So what are stocks? First, we'll have to take a step back and talk about trading. There are many different things you can trade. You can trade stocks, you can trade REITs, you can trade mutual funds, and you can trade government bonds. There is a variety of different things that you can trade, but for simplicity, we're just going to talk about stocks. First, we'll talk about what a stock actually is. It is basically a portion of a company. So by purchasing a stock of a company, you are acquiring part of an ownership or equity of that company. That gives you some benefits. For example, if a company increases in value, its stock usually increases in value, and therefore you could receive a higher return if you were to sell it. Or if the company pays out dividends to its shareholders, which is you, as you own a stock, then you get some money from it. So there's many benefits of owning a stock of a particular company. Now, in terms of trading stock, there's many different methods of trading stock, but they really depend on what type of investor you are. Are you the type of investor who's thinking far into the future, or are you the type of trader who likes to trade daily, measure risk against reward and try and beat the market to gain a little bit of money? So there's three sort of main strategies that I know of. There's dividend investing, there's CFDs, and there's capital investing. Okay, so a CFD is a contract for difference. This is different to the other two methods in that you don't actually purchase equity of the company. So you don't even buy the stock. You don't own the stock that you're dealing with. In fact, what you're doing is you're betting on that stock to either increase or decrease over a set period of time. In my opinion, this is the riskiest form of trading, as there's a lot of leverage that can go behind a bet, and you could end up losing a lot of money. I think the statistic lies somewhere around 76% of people who CFD trade lose money. So it's not ideal, and you really have to know what you're doing to get involved in that. CFD tends to be more for day traders. It tends to be more of a high risk, high reward environment. So for my purposes, I tend to stay away from it, and I would recommend the same for you if you're a beginner. The other one I mentioned was dividend stock investing. So this happens when you purchase a stock of a company, and if they're making such a high return or making enough profit, they will redistribute some of that profit back out to the shareholders, which is you. So you could see a small reward for owning a share in a company. It depends on the type of company as to how much they share out and how often they share out. They can share out monthly, they can share out quarterly, or they can share out yearly. There's different types, so it really depends. You need to look into that specific company. They also don't usually share a large amount out. It's something around the 4% margin, so you're not going to make huge returns, but you will still make returns. So a lot of people like dividend investing because they'd receive small amounts of money back on a regular basis. It's sort of a passive income that they can then reinvest into that stock and create a sort of a compounding effect and increase their portfolio just through the dividend payments. Obviously, it's not a lot and you won't be receiving that much, but over a period of time of 20 years or so, if you keep investing into stocks and your dividends are reinvested in stocks, you can make a massive difference in your portfolio. Of course, not every company gives back dividends. Some of them like to just reinvest the money they make back into the company. And this is another form of stock that people are interested in. They're only interested in these for their capital gains. Because the company is more interested in reinvesting in itself, it will see a larger growth over a shorter period of time. Therefore, it's more attractive to people who are just holding on to, who are less interested in receiving a monthly or quarterly payout and more interested in their final value over a long period of time. Personally, I think you should own a bit of both. The dividends, obviously, you get payments that you can reinvest into your portfolio, but the capital gain stocks will increase, which you'll also benefit from over a longer period of time. I personally don't trade CFDs, so I can't comment or advise in that sort of area, so I'm going to leave that to the side. Before you start investing, I'd recommend you save up an emergency fund, somewhere over 6 months salary worth of money, and just sit it in your account for just in case something goes terribly wrong. in life, like COVID could put you out of the job, and a 6-month cushion can make a big difference to your well-being. Secondly, I want to talk about diversifying. You're always going to make sure you diversify your portfolio. So invest in different types of stocks, things like energy, gas, electric, services, but also maybe technology, automotives, anything like that. Those are different types of sectors. A great way to vary your portfolio straight out of the bat is to invest in something like an index fund, which is a collection of different companies put together. My final piece of advice is to watch out for fees. So different types of brokerages sometimes charge you commissioning fees or transfer fees or trade fees, and they all vary in price. So you need to do your research and look out for different types. If you're going to trade through like an app like I do, then sometimes they offer nice advantages, like Trading 212 is free stock trading for the first 20 trades a month. This is great for me because I'm only buying a few stocks throughout the month just to build my portfolio over a period. I'm not day trading, so I'm not doing a lot of trades, so I don't see any transfer fees. If you trade CFDs, they do charge fees, so you can see hidden fees, and you really need to read the terms and conditions on that side. So as I mentioned, Trading 212, that is a trading app that I use. There's a variety of different ones, but I like this one because it's got good reviews and also doesn't charge me a commission. It even allows me to buy portions of stock, which is really beneficial because then I can buy something like a bit of Amazon, which is something like $2,000 US. I'm not going to buy something like that straight off the bat. So it allows us beginners to really put our foot in the door with the big companies without having to fork out a large amount of capital. So I'm going to talk you through a little bit about Trading 212, how you can find your way around and make your first trade. Once you create an account, it's relatively simple. You just follow the steps, put in your details, verify yourself, and deposit some money. You only need to deposit like £1 to start, so it's not a huge amount. If you're not confident in trading real money straight away, it also offers a practice version. You can just switch from the practice to the real, so you can run the two at the same time. It really doesn't matter. When you first start, it shows you a variety of different stocks. These are the main big ones on the watch list. You can select some of these, delete some of these. If you look at the top bar, you can switch between UK, US stocks, and you can even go to the very right and create your own category, right? And in that category, you can put stocks that you're interested in. You can create a tech folder and just put all the tech companies that you're interested in watching in that area. So it just makes things a little bit more organized for yourself. If you go into a particular stock, you can see the instrument details, which tells you, in the instrument details, it tells you what currency they trade in, the sell price, buy price, what stock market it's in, and details like that. If you go into the history portion, it tells you all the different trades you've made previously. Obviously, if you're just starting, you're not going to have any. Now, if you look at individual companies as opposed to index funds and such, they'll also have company details. So this is really useful just to tell you about the company. Ideally, you should already know about the company. So if you don't know how a company's making money, I don't recommend you buy its stock. Then if you scroll down, it tells you the financial summary, the balance sheet, cash flow, all pretty important information if you want to do some detailed analysis on a company before you buy stock. And you can even look at their full income statements, all the juicy details that can really help influence your decision. In terms of long-term investing, you really want to just start by picking companies that you are confident are going to do well over a long period of time. Stuff like Google, Apple, Amazon, things that have been around for a really long time. Or you want to look at your S&P 500s, which, like I said, is a collection of different companies. So they would be an ideal first investment because they will just continue to go up over a period of time. If you go to the pie graph in the bottom left, it'll show you a portfolio. These are the stocks that you own and any free funds that you have available. So it tells you your overall balance and what's invested in what. Then you got the search bar. So this allows you obviously to search for specific stocks you might be interested in following. And then the burger menu on the right gives you some more information that you can go through. So you'll have get free shares. You can share a link with any of your friends, up to 20 people, I believe. And if they sign up through your link, then you get one free stock and they get one free stock worth anywhere up to £100. So pretty ideal to get started. Just spread the news with your friends. You got managed funds that allow you to deposit or withdraw money. It even has some videos, which is great for educating yourself on just general investing. Some really useful stuff there. Economic calendar, you can see when dividends are due and other important information about companies. Price alerts, this is a pretty useful one as well. You can set a price alert on a stock so that if it drops or rises above a certain price, it'll notify you, and that way you can buy it or sell it depending on what your intention is. You get notifications. This is just general news and history of your account and things that are happening on the stock market. Settings, it's just general settings, password. You can even change the theme, things like that. And that's pretty much it. You've got the switch to practice at the bottom, like I mentioned before, and it gives you, I think, £50,000 or dollars to start your account up and start practice trading. When you're first setting up your account, it'll ask you what type of account you want to set up, either an investing or an ISA or a CFD account. You want to go for either the invest or ISA. I went for invest when I first started, but after I've done a lot of research, ISA is more ideal for me because you don't have to pay tax. It's non-taxable profit. So any profit I make from my stocks won't be taxed through an ISA. Whereas with investing, I get the national insurance tax on top of it, so it's not ideal. I can't switch the two, unfortunately. So when you first create your account, you'll get this pop-up asking if you want a CFD, invest, or ISA. You'd want to go for either an invest or ISA, depending on if you already own an ISA, stocks and shares ISA. If you don't, then I recommend the ISA because it's tax-free profit. You won't be charged for any profit you make from selling stocks. And that's pretty much it. So what I'm going to do is I'm going to buy a stock or a portion of a stock. I'm going to buy Apple. So I'll press the buy button. I'll drag the cursor along to choose the quantity of stock I want. As you can see, I could actually purchase portions of stock there. And once I've selected how much of a stock I want, I'll press buy, send the buy order, and that's it. Order executed. So I now own one full share of Apple. I bought this through the US stock market because that's what Apple trades on. If the stock market's closed, say the US or the UK market is closed just because it's out of hours, then it won't complete the trade until the stock market opens up again. So you might have to wait a couple of hours to get that stock through. And that is it. That's a really basic trading 212 breakdown and a little bit about stocks. I'm going to go into much more detail about stocks later on, specifically dividend investing, because I think that's a really important one. If there's anything else in particular that you might be interested in hearing about, don't forget to comment in the comment section below. If you like the content in this video, don't forget to hit the subscribe button and hit that notification bell so it'll notify you every time I post a new video. Until next time, bye.